We've got Pankaj Pandey, Naresh Mirani, Kunal Bothra, all of them joining in to talk about which way they feel the markets are headed. Naresh, hi, afternoon. Let me come to you first. What is it that you're making of the trend in the market today?
After the recovery towards the previous swing highs of 23,800, 850, we've taken a bit of a pause, and that should be normal given the extent of the rally, almost 1,800 points from the low. But we've seen a little more of a dip on the small cap and the mid cap indices, and we have another three sessions to go for this year to end. We could continue to see a range bound move, but at a higher base at 23,500 to 23,800 for the next three sessions.
That's the take coming on the markets. Good afternoon to you, Naresh. Good afternoon to you, Kunal, as well as Pankaj. And Kunal, let me come to you and get your view actually coming in on the way the setup has been like. Given the fact that, yes, we've seen some sort of profit booking kick in, should one actually take this as the new norm that every time you'll have markets rise and rise so swiftly, you will see bouts of profit booking?
Yeah, you should see a good amount of profit booking at every interval, because that's a healthy sign of the markets consolidating and trying to digest the gains which you've been going through. It's almost like an 1,800 to 1,900 point rally on the Nifty, what we've seen in the last 7-8 days or 10 days odd, over the last 2 weeks specifically. So I think it's a phenomenal up move for the index, and especially at a point where the markets or most of the market participants were not anticipating any kind of such a strong up move. Now, when you're coming closer to a resistance points, you're looking at retracements, there are bound to be a point where the index consolidates. There are important technical levels which we are looking at 23,800, 24,000 mark, the 200-day moving average, the 50% retracement of that 4,000 plus point fall which we've seen in the last 6 months for the indices. So a lot of reasons why the markets are bound to consolidate, and I believe that that's a healthy sign for the markets overall.
Pankaj, hi, afternoon. Do you also believe that up until now to, April 2nd, next week, in any case being a truncated one, the market will be a little bit quiet ahead of that big tariff deadline?
Oh, yes. I think what we believe is that with this kind of a move, probably we might witness some kind of a resistance at 23,800 kind of a level, and possibly we could sort of come down to 23,000 kind of levels. Unless something dramatic does not happen, especially on the tariff front, we would want to believe that the bottom has been made. Largely because most of the domestic macros are fine. On the earnings side, we are expecting about 14% CAGR growth in earnings for next 2 years. Post-correction, Nifty valuations was somewhere about 17.5 FY27 times. So those are fine. Most of the macroeconomic variables domestically have been fine. I think it was the larger issue with the tariff-related anxiety which has been playing its role. So if you don't see much dramatic something happening there, then I think we would want to believe that once the market corrects to say something like 23,000 kind of level, then probably 25,000 kind of a level is very much on the cards.
Pankaj, I just wanted to get your views actually coming in on the likes of what exactly is happening to the two-wheeler space in particular, and the ones that have exposure to the electric vehicle space. You have the finance minister a short while ago actually talk about the fact that the budget has proposed to go ahead and cut that a duty on about 35 of the items which are actually linked to battery manufacturing for EVs. What's your take on this, and how should you play this theme?
So I think in the entire auto as a space, one can be selective because you look at a segment like CV, there's hardly volume growth is going to be in low single digits. You can't have pricing which will help the stocks to sort of deliver. Same is the case with two-wheelers. I think two-wheelers already 9 months had seen a pretty good growth rate. But from here on, one needs to be selective. So which is why we feel that Eicher Motors probably looks better than the rest of the players. They are already clocking 90,000 kind of a volumes on a monthly basis. Or in case if I have to sort of name one more, then it would be Bajaj Auto. I think the stock has seen a fair amount of correction. So that is another. On the PV side, most of the players are struggling except for M&M, which is expected to deliver mid-teen kind of a volume growth. On top of it, our sense is that Q4 will witness about 15% kind of a growth in tractors. So one needs to be very selective in the entire auto as a space at this point in time.
big crucial day, that is the April 2nd, when you will have the reciprocal tariffs actually come about. In fact, my colleague spoke to Jamshed N. Godrej, who is the CMD at Godrej and Boyce manufacturing company, and what he's saying is that it's time to focus on competitiveness and not the tariffs. This he spoke at the CII National Manufacturing Summit. So let's go across and listen in.
India has always had high tariffs, right? Okay, why? Because we wanted to protect industry. What happened in 91? Okay, why did that whole system of deregulation take place? Why were tariffs cut? Why was the rupee significantly devalued? Okay, we have to be competitive. I mean, tariffs is all about competition. Today, industry is pretty good, very strong. Many companies, which are both global companies, Indian companies, everyone, and there are lots of them who are internationally competitive and doing a good job. But India is still tiny when it comes to manufacturing. One of the biggest benefits that China has is scale. So we need the scale also. Now, many industries in India have scale. Okay, the steel industry has scale, the cement industry has scale. So there are many such industries. Okay, but everybody should have scale if they have to be competitive. Actually, how you can be competitive with very low tariffs is really the challenge.
In fact, we should bring up that note from the house of UBS on cement as a play, and that would be interesting to see, given that today itself you've got some of these cement majors, holding up very smartly, led, of course, by Ultratech Cement. UBS has talked about as to how the bumpy road for cement is only going to get better with time, and they've talked about as to how the rough patch may be coming to an end. They've, of course, upgraded Ultratech, Ambuja, as well as Dalmia to a buy. They've talked about as to how demand is going to bounce back in FY26, and the structural cost reduction could be on the anvil. They talked about how the two market leaders clearly have the upper hand as the consolidation within the sector continues. That's clearly one such case in point, being Ultratech, and Ambuja also is their top pick. Dalmia, of course, they've upgraded from the earlier sell to now maintain, and to a buy, I beg your pardon, and maintain a buy on ACC given its supportive valuations as well as industry tailwinds as well. For Ultratech, of course, they believe that they've shown a very strong execution in tough times and led the industry in growth as well as margins. Pankaj, what are your thoughts on whether cement could be a good contra play right now?
Absolutely. I think so in cement, if you look at the last 4 months, we have seen a price hike of about 20 to 25 rupees per bag. I think except South is the only region where the prices have been rolled back. So there the hike is only in the range of say 3 to 5 rupees per bag. And then there was one minor issue with petcoke prices going up by 20-25%, but that would have implications of say 70 to 80 rupees on a per ton basis. But our sense is that this is one sector has already sort of a fair amount of struggle. Prices are at more than a year low. So our sense is that with industry consolidating, there are better days ahead. And also our sense is that since we'll have lesser number of elections, so your overall volume growth is expected to be a lot more better at high single digits. So we like this entire space for a 2-year perspective with the likes of, say, Ultratech, Ambuja Cement, and then both JK Lakshmi and JK Cement. I think these are the ones which we are liking. I think southern players, we need to still wait and watch for prices to become better.
Right, so that's the take coming in on cement space as Pankaj's view. But in fact, let's actually hear out what UBS had to say, or what's the rationale behind UBS's upgrades. Snehi is here to take us through all of that. Snehi, over to you.
Well, absolutely. So UBS has come out with a note on the entire cement sector, and then now they have turned very bullish on this sector. They believe that the rough patch that the sector has been seeing for quite some time now has come to an end. Earlier they were negative on this sector, but now they have turned positive and they anticipate an earnings upcycle to emerge in FY26. They also forecast strong growth over FY25 to FY27. So they're very constructive and optimistic on this sector going ahead. They say that demand will bounce back in FY26 and the structural cost reduction is also on the anvil. So companies are also being mindful about this. They also believe that the two market leaders, that's Ultratech as well as Ambuja, have the upper hand as the consolidation in the space continues. The sector is trading slightly higher than the past 5-year mean, which is the 1-year forward EB/EBITDA. And now their individual bets for Ultratech Cement, they've upgraded the stock to a buy rating from a neutral rating, also hiked the target price to 13,000 rupees per share from 9,000 earlier. So it's a very big upgrade coming in for Ultratech Cement. For Ambuja Cement, they've upgraded the stock to a buy from the sell rating, and target price has also been hiked to 620 rupees from 475 earlier. For ACC, they continue to maintain a buy rating on the stock. However, they've cut the target price to 2,250 from 2,450 earlier. And lastly, for Dalmia Bharat, they've upgraded the stock to a buy from sell rating, but they've also cut the target price to 2,100 from 2,160 earlier. So that's UBS's take on the entire cement space, and they continue to be optimistic on the space going ahead.
Naresh, are you seeing the sector bottoming out in any which way when it comes to some of these cement plays, Ambuja, ACC, Dalmia Bharat, or for that matter, the leader Ultratech?
So the leader has been more towards a new all-time high. So the stock is only corrected 10% compared to the rest of the market. You have Shree Cement setting a 52-week high. At the same time, you have a Dalmia Bharat, which is actually on the lower end of the range of the last 3 years. But they did not see a lot of selling pressure after breaking new 52-week lows. So we have one section of the cement names closer to 52-week highs and one struggling. I think the struggling names look interesting for a bounce back. So Ambuja, ACC on dips continue to be a buy for a bounce back to say 10 to 15% over the next few months.
That's the take coming in on cement. Kunal, what's your view actually coming in on the sector that is actually outperforming today, and that's the IT space? We've spoken a lot about it, but this one is also on the tenterhooks, given the fact what happens globally. What's your take on the charts? How is IT sector looking like to you? And is it the mid-tier IT companies that one should look at, or is the large caps?
Yeah, today I think the mid-cap IT stocks are doing reasonably well. Over the last 2 or 3 days, there's been some bit of short covering which is there into few mid-cap IT stocks. But then I think we'll have to maybe look at this as a phenomena that maybe it's the expiry week, so there could be a bit of juggling of positions, over there. What matters, is that if these stocks have, the wherewithal to try and break past about the previous swing high, so whether it's maybe another 3% to 5% swing high for these stocks. And if that happens, that's where we can probably anticipate that this could be a turnaround sector yet again for the IT index. As of now, it looks like more of a short covering play. It looks like more of juggling because of the expiry. Maybe over the next couple of days, for example, if the IT index breaks past about 38,200 to 50 mark, that's where I would believe that we may probably get a lot more confidence that we are looking at a potential short-term turnaround for the IT index.
Pankaj, what is your own thought on IT? Because even after the vicious correction, the valuations are still rich. Would you say that avoid IT for now? Better opportunities in the market for sure?
So on the ITC, the US is the biggest market, and typically most of the companies that derive 50% of their revenues from them. Now, with this tariff-led uncertainty, the growth which was, or the strong rebound in the growth which was expected in FY26 is now sort of pushed back. And I am not too sure whether we can sort of say in this post results that going forward, we are going to see a strong rebound. So I would expect that since the sell-off has happened, it was one of the worst performing sector in the last 1 month. So some bit of a buying at the lower levels is fine, but I don't see a sustained move in the IT going forward unless we see something big improvement in a market like say US. So one needs to be very selective. So for example, when you look at tier 2 names like say Coforge and say Persistent Systems, I think these are the two companies which you like, and both these companies are available at 2 times PEG. Whereas when you look at a big one name like say Infosys, it's above PEG value, so 2 times PEG. So from that perspective, tier 2 selectively are okay, but in general, I don't see a sustained recovery in IT as an overall segment.
An interesting take coming in on the IT space. Thank you so much, Pankaj, for joining us on the show to give your views on the markets, the sectors that are actually standing out at this point in time. But Kunal, let me come to you, get your closing trades for our viewers.
Well, that's an interesting stock in terms of a potential breakout, and that's DMart or Avenue Supermarts. The stock today has managed to cross back closer to that 4,000 plus mark, so it looks attractive on the short-term play. What
about you, Naresh? Which is the stock that you are liking at this point in time?
So that's a buy on Bajaj Finserv. The stock has given a breakout in the near term, a cup and handle breakout, also trying very close to making new all-time highs, expecting it to make a new all-time high on this breakout move. So expecting a target price of 2000 to 2100 in the next couple of sessions.
All right, so there are a couple of closing trades coming in from Kunal as well as Naresh. On that note, we slip into a break on this edition of Closing Trades with the news that the broader market is under pressure. Even Nifty Bank has actually caved in at this point in time.